Hello friends and welcome to Ticker TV's Commodities Market Update with Jateen Trivedi. I am Senior Research Analyst with LKP Commodities. So for this week we are looking at the bullions market on the sideways to range bound trend, but with a little bit of zinch towards the buying side and advantage for the bulls is that the prices are looking a little bit supportive at the lower ends since we have seen a good amount of rally being witnessed last week on back of the new delta virus strain which is spreading a little bit rapidly on the euro zones and the asian markets as well now asian countries as well now looking at the current scenario it can be a little bit uh, volatile sessions also for the gold and silver prices because the vaccination drive in itself is a very good positive note for the economies, which is not going to help the gold prices first and foremost. But the other parts which are helping the gold prices from the lower ends are the resilience which the dollar index is showing on higher notes. It is not very easy for the dollar index to scale beyond 93 and hold above it. So till the time dollar index is not scaling above 93, there are high chances that the dollar index might subdue on the lower end, and we will again see strong rallies being witnessed in the bullions prices, especially the gold prices. Now the other point is that the Chinese data hasn't been quite on the positive note recently. The CPI data and the manufacturing data haven't been quite positive for the Chinese economy. So which is again going to help the gold prices, and the Basel III norms which are going to be implemented on the European nations and others as well. And that is also going to be kind of a supportive prices for the gold in itself. Uh, it will be a long run which the Basel III will be impacted, but sooner or later we will start seeing the impact on the bullions prices as the Basel III norms start to get implemented slowly and gradually going ahead. Now technically if we see the structure is positive till the time it is holding above 46,900, and on dips towards 47,300 to 47,500 it is a very strong supportive zone. So we do not see it the prices falling beyond this supportive zone as of now. On the higher end 48,300 to 48,500 is a stiff resistance, so one should be booking profits near those zones as the prices are not looking too much bullish, but they are looking bullish on any dips on the gold and silver front. Speaking about the silver now, on the technical terms, it is a range bound trade as of now, as it is trading near the 20 DMA on the daily charts. We have seen some range bound trade happening in the silver front between 67,800 on the lower end and 70,500 on the higher end. So roughly it is between 68 to 70,000 going on. That is the 2,000 point range trend being witnessed in the silver market as well. So one should be looking at capturing this range by buying it on dips near 68,500 with the stop loss below 67,800, and on the higher note 69,800 to 70,000 will act as a good opportunity to sell the silver prices with the stop loss above 70,600. So this is the range that one should be looking to play in silver market. Now moving on to the energies pack, the crude oil prices have been very strong, and we have seen the market is capturing good momentum on dips. But speaking about the last week's sell-off, one needs to be careful at higher levels now, because till the time the prices are not crossing above 5650, uh, the prices can show some corrective moves as well. So there will be a high volatile range trade between 5300 on the lower end and 5550 5600 on the higher end. So one needs to be very careful while trading in the crude prices, or best to avoid the crude prices right now if you are not very sure about the trading perspective. Now speaking about the base metals, copper prices are a little bit weak till the time they are trading below 735. Any rise towards 730 732 is a sell opportunity. On the lower end 720 to 715 will act as a supportive zone, so one needs to be booking profits over there and wait for some prices to show some rise for selling. It is not advisable to sell at lower ends because the copper prices are taking support at 705 to 710 odd zones as well. uh, the other base metal which is looking a positive on the positive note on the contrary to copper prices is the lead prices. See, we are recommending the lead prices to outperform the other base metals as of now. The charts which are speaking that the lead prices will outperform the other base metals for short term basis especially. So till the time lead prices are holding 170 to 174, uh, it is a very strong commodity which is looking on the charts, as we have seen some strong breakouts happening recently, and the pattern is also looking quite positive for the lead prices. So one should be looking at lead prices on buying format, buying zone, uh, keeping the target of around 190 to 194 on the higher end, and with a imminent stop loss around about 169 for the positional traders, and short term traders can keep a stop loss of 174 on dips. So this is about it from me, guys, on this commodities market front for Ticker TV. Hope to catch you all again. Thank you.